I'm Julie Hyman with Brad Smith and Brian Sozzi. Let's take a look at the futures here. Everybody waiting for Jay Powell to speak in Jackson Hole, Wyoming. Ahead of that, we're not seeing much change in the futures, but just in the past few moments, they peaked into the green. At least the Dow futures up a little more than 50 points. S&P futures, very little change. NASDAQ 100 futures, very little changed. And that's because everyone's on pins and needles waiting for the thing we're going to talk about right now. Saz.
Julie's fired up. I'm fired up. Brad fired up.
My
Here
gosh.
are 3 things you need to know right now. T-minus 1 hour until we hear directly from Federal Reserve Chair Jerome Powell in Jackson Hole, Wyoming. As we ready for that big moment, we did just get a new read on economic data for July with the PCE showing some easing. Let's bring in Yahoo Finance global correspondent Brian Cheung, who's live in Jackson Hole, Wyoming. And Brian, where's the bass? I heard you caught a big bass for us.
No, I wasn't doing any fishing out here, although, of course, I've been trying to fish for, some Fed officials all day.
Wow, that's pretty good. What's the latest?
Well, obviously, inflation data coming in hot. Comparatively, still 6.3% higher than it was this time last year. But you do maybe take a little bit of solace from the fact that personal consumption expenditures, again, that key measure of inflation falling 0.1% between June and July, kind of in the theme of the consumer price index, the other reading of inflation, showing a plateauing of price increases between June and July as well. Now, of course, Federal Reserve's mission is not done, even though they target PCE. When you take out those more volatile components like food and energy, we know that gasoline prices have come down, still 4.6% on a year-over-year basis. That's far away from the Fed's goal of 2%, and that's likely going to be the focus of Jay Powell's speech in about an hour here in Jackson Hole. We don't know exactly what's going to be in that speech just yet, beyond the fact that it's going to touch on the economic outlook. But with inflation remaining the biggest issue, not just in the minds of Fed policymakers, but to average Americans at large, what is the Fed chairman going to say that could walk back the remarks that he made at the virtual Jackson Hole last year, where he said that those price increases were going to be, of course, the T word, transitory, the term of which has been retired by the Federal Reserve. Now, of course, there's been a lot of other interest in what's been going on here in Jackson Hole, namely because of the issues happening around the world with the recession worries also spilling over perhaps in China, in Europe as well. How do those things impact what's happening here in the United States? The paper discussions that are on dock as far as the agenda is concerned, how there could be changes to the economy in terms of economic constraints, employment, potential output, fiscal constraints, central bank balance sheets. Remember, we're doing quantitative tightening right now. How do all of those things impact an economy that could be different post-pandemic? Those are all going to be questions addressed when the conference kicks off shortly, guys.
We've largely traded sideways kind of coming into this, with the S&P 500 over the course of this week really kind of being range bound here. So what do you believe is the best case scenario for what the Fed might say? And what's the worst case scenario for what Fed Chair Jay Powell could come out with?
Well, Brad, it's a really interesting point that you bring up here, because financial conditions have kind of re-tightened in the past few days, and that's essentially the inside baseball jargon for stock markets going down and bond yields going back up. What we've seen in the past 2 weeks is an admission from markets that maybe they didn't read the Federal Reserve right over the past 2 months or so, ever since the Fed began doing those outsized 75 basis point hikes in the June and July meetings. We saw financial conditions start to loosen, where the stock market ripped higher and then bond yields started to go back down. Markets maybe pricing in a full expectation of exactly how they felt the Federal Reserve was going to be able to further hike rates, and then at some point stop, and then maybe even start to cut rates. But maybe the markets were getting a little ahead of themselves because of the fact that the Fed has insisted that they're going to continue to raise interest rates in the amount and at the pace needed to get inflation back down to 2%. That's not going to happen this year, as Kansas City Fed President Esther George told me 2 days ago. But of course, the Federal Reserve wants to be careful with these recession worries not to hike so fast into a recession. Markets trying to figure out exactly what that means. So the sell-off, not sell-off per se, but the red that we have seen so far this week does tell you that perhaps markets are already pricing in the hawkishness of this speech. Of course, we'll find out in about an hour or so.
Yes, we will. And you'll be there continuing to monitor it for us. Thank you, Brian. Be sure to stick with Yahoo Finance all day for our live coverage of the Jackson Hole Symposium. Still ahead, we're going to rejoin Brian in Jackson Hole to bring you Powell's speech live. That starts at 10 a.m. Eastern. Then Brian is speaking with Federal Reserve Bank of Cleveland President Loretta Mester. You can catch that at 3 p.m.